Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, October 14th, 2013. Last week the S&P sold down to 1640, at or near the September 6 low at 1638. Buying interest entered the market as it pulled back to the low, and the S&P auctioned back up above what had been support at 1666 and rallied back up through the previous trading range. On Friday, the S&P made a modest pullback down to 1674 before rallying up at or near 1700 into the close. At the open of Sunday's Globex session, S&P futures gapped down below Friday's close and sold down to 1681, at or near Friday's opening range low. At the open of Monday's session, the S&P had traded up off the low and auctioned in a narrow trading range. There was no additional selling pressure that retested the overnight low, and after trading flat at the open, buying interest entered the market, and the S&P auctioned back up to Friday's high and went on to make a new high, ending Monday's session at 1705. During the after hours, the buying interest continued, and the S&P traded up at or near 1710. The next known resistance levels above today's close are the September 19th low at 1713, the September 20th high at 1720, and the multi-year high at 1727. For a detailed look at today's market action, we'll focus our analysis on the 5-tick range chart. Number 1 shows the breakdown that occurred during the overnight session, and number 2 indicates the pullback at or near Friday's low that occurred during the overnight session. When the S&P auctioned back up at or near 1690, a narrow trading range developed, and the high-frequency market maker dominated the order execution sequence. At the close of the European session, the start of the buy-side sequence began. The S&P auctioned back up above Friday's high at 1698. The buy-side sequence continued until the S&P auctioned up at or near 1703. There was a minor pause in the buy-side execution sequence, and the S&P pulled back modestly to 1701. Buying interest returned, and the S&P auctioned back up to the high and made a modest higher high. Late in the day, the S&P pulled back at or near 1701, but there was no selling pressure driving the market back into the trading range, and the S&P auctioned up to the high into the close. Coming into tomorrow's session, there is minor support at or near Friday's high at 1698-1697. Near-term support is located at or near Sunday's Globex low at 1680. Beneath Sunday's Globex low, the next support level is down at 1671. Should the market continue its buy-side bias, resistance is located up at the multi-year high at 1727. During the sell-off below the multi-year high, the S&P had auctioned back up to 1720 before the buying interest waned. Minor support had developed at the September 19th low at 1713. The 1713 price level was the breakdown point that began the decline below the multi-year high. That concludes today's recap of the S&P 500 E-mini. If you would like to follow our real-time commentary, We invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.